Hello everyone, and welcome back to Explain the Charts. Today is November 6th, 2025, and we are taking an in-depth look at one of the market's biggest players, Microsoft, ticker symbol Microsoft. There's a lot of conflicting information in the news lately, with record-breaking valuations and strong earnings on one hand, but a concerning stock pullback on the other. In this video, we'll dissect the latest news and then dive deep into the charts to understand the current technical picture, identify key levels, and discuss what might happen next. First, let's talk about the news, because it's been a driving force behind the recent volatility. Last week, Microsoft reported fantastic fiscal first quarter earnings, beating expectations with revenue of $77.7 billion and earnings per share of $4.13. The numbers were largely driven by incredible growth in their cloud division, with Azure revenue surging, fueled by intense demand for AI services. This AI frenzy has been a dominant theme, with Microsoft recently surpassing a $4 trillion valuation and strengthening its crucial partnership with OpenAI. However, the market's reaction has been puzzlingly negative. Despite the earnings beat, the stock has been on a losing streak, falling for 5 consecutive days. This sell-off seems to stem from investor concerns about the enormous costs associated with the AI race. Microsoft reported capital expenditures of nearly $35 billion for the quarter, a 74% increase from last year, as they aggressively build out data centers. While analysts remain overwhelmingly bullish with price targets well into the $600s and even a $700 target from Wells Fargo, investors seem to be taking a sell-the-news approach, focusing on the near-term costs rather than the long-term potential. Now, let's see how this news correlates with the price action on the daily chart. We can see a powerful uptrend that has been in place for the better part of a year, culminating in a test of the all-time highs. Let's zoom in on the action from the past couple of weeks to really see the impact of that earnings report. Here we can see the price consolidating in mid-October before the report. Then on October 28th, following the positive news, the stock gapped up massively, opening at $550 after closing the previous day around $531. It pushed to a high of $553.72, just shy of its all-time high of $555.45. But that was the peak. What followed was a sharp reversal and a series of strong red candles on high volume, which is a classic sign of institutional profit-taking. This recent plunge has broken through some important levels. The top of that earnings gap, around $531, should have acted as support, but the price sliced right through it, which is a bearish signal. The stock is now sitting on a critical support zone right around $507, which corresponds to the lows from mid-October. This is the market's current line in the sand. If this level breaks, the next logical area of support is the psychological $500 mark. Below that, we'd be looking at the lows from September around $495. On the upside, any bounce will face immediate resistance at the broken support level of $531. Reclaiming that level would be very bullish and suggest this was just a quick shakeout. The ultimate resistance, of course, remains the all-time high at $555.45. Let's switch over to the 1-hour chart to get a better look at the short-term trend. Looking at the past few days, you can clearly see a downtrend in effect, with a series of lower highs and lower lows. The price is struggling to mount any significant bounce, with sellers stepping in on every small rally. This confirms the intense selling pressure we saw on the daily chart's volume. Until this pattern of lower highs is broken, the short-term path of least resistance remains down. Now, for an even closer look, here is the 15-minute chart showing yesterday's price action. We can see the stock was weak for most of the session, attempting to rally but ultimately closing near its lows. The day ended with a final push down to the $507 level, which is where buyers will need to show up today to prevent further declines. This intraday action reinforces the bearish short-term momentum carrying into today's session. So, let's put it all together and recap what we're looking at. From a bullish perspective, the long-term story powered by AI is undeniable, and the company's fundamentals are rock solid. This pullback could be a fantastic buying opportunity if support at the $500 to $507 zone holds. For this to happen, we would need to see buying volume step up and the price begin to form a base here, eventually reclaiming that $531 level. I'd place the short-term likelihood of this bounce at about 40%, as the current momentum is strongly against it, but the long-term bullish case remains very strong. From a bearish perspective, the price action is very weak. A negative reaction to a stellar earnings report is a significant red flag, suggesting the stock was overbought and vulnerable. If sellers break the $507 support level with conviction, a move down to $495 seems highly probable. Given the current trend and volume, I see this as having a 60% chance of happening in the near term. The key levels to watch are critical: support at $507 and $500, and resistance at $531 and the all-time high of $555. Keep an eye on trading volume. A decline in selling volume would be the first sign of a potential bottom. Also, watch the broader tech sector, as its performance will heavily influence Microsoft. Finally, please remember that this video is for informational purposes only and is not financial advice. You should always conduct your own research and due diligence before making any investment decisions. Thank you for watching Explain the Charts. If you found this analysis helpful, please hit the like button, subscribe to the channel, and let us know your thoughts on Microsoft in the comments below.